If you've been following this channel, you know I've been talking incessantly about dry powder. Money stashed away, ideally in an interest-bearing vehicle like a money market fund or a high-yield savings account, or maybe even short-term treasuries that's collecting interest while we're looking for opportunities to invest that money. But the economy is tight and money is hard to come by. So I started to think, Damon, what if you had $100 to invest right now and you wanted to deploy it into something? What would you invest in? Well, if I'm looking at Yahoo Finance and a lot of the financial headlines, they're usually talking about tech stocks and things of that nature. And tech stocks aren't cheap. Google isn't cheap. Microsoft isn't cheap. Nvidia isn't cheap. If I have that $100, I can't even get one full share of any of these companies. So what would I do? Well, I think I identified two options that are worthy of my $100, and you might think they're worthy of yours as well. So let's dive in. The first opportunity is Intel Corporation. Now, if you've been around for long enough, you remember the Intel commercials from the 80s and the 90s. They were the dominant producer of CPUs and processors during that time, really up through the 2010s. They peaked around 2000 where they had about 80 to 90% of the market on lock in terms of producing CPUs, etc. In the 2010s, other competitors entered the market, competitors like Nvidia and AMD, and eventually they started taking market share away from Intel, and Intel's prominence has declined fairly steadily since then. And for the last 10 years or so, you haven't really heard anything about Nvidia. All the talk in terms of processors and chips has been Nvidia, AMD, and some of the other leaders, none of which are Intel. But that all changed on August 22nd, 2025, when the Trump administration announced that they would be deploying about $10 billion into Intel Corporation. That deployment netted them about a 10% stake in the company, and they got it at about $20 or so a share. It's not unusual for the US government to invest in a private sector company. So you might be thinking, Damon, what tree are you barking up? This is probably just a nothing burger. But remember, we have to follow the money. And based on this administration, sometimes we have to follow the politics and the money. So on August 22nd, Trump administration drops a bag on Intel, seemingly out of the blue. And then less than a month later, the administration is invited to the United Kingdom to sit down with the king and the queen and the royals. And who do they invite? Well, amongst other notable people, the president invited a bunch of tech CEOs, one of which was Jensen Huang, the CEO of Nvidia Corporation. Now, this all went down on September 17th, 2025. And then interestingly enough, September 18th, 2025, Nvidia announced that they would be investing in who? Drumroll, Intel Corporation. Now, Nvidia didn't invest as much as the US government. They dropped about $5 billion, took about 4% stake in the company, and that amounted to about $23 a share. So the government got it at about $20 a share. Nvidia got Intel at about $23 a share. In both cases, those share prices were below market value. Once the news dropped that Nvidia invested in Intel, the Intel stock price skyrocketed from about $25 to $32. So 25% or so increase in a day. So in less than 2 months, the Trump administration and Nvidia are both up on their investment in Intel. The US government is up approximately $5.4 billion, and Nvidia is up $2 billion approximately, again, in less than 2 months. So you might be thinking, well, Damon, looks like we missed the move. The stock already skyrocketed. Well, maybe. But historically, the US government doesn't hold stocks for short periods of time. They're typically long-term holders. So this initial pop could very well just be that, an initial pop on the way to increasing gains. And Nvidia, their investment represented what amounts to be a long-term partnership, because Intel is now going to be, producing some of their chips possibly and things of that nature. So NVIDIA didn't just hop in, drop some bread with the intent of pulling it out and making a profit. This is a partnership for at least the medium term and probably for the long term. So what does that mean for myself? Well, for my $100, if I was thinking about, where could I deploy my capital with the potential of, an increase over time, I might be looking at Intel, especially considering the stock price is well under $100. So that 100 that I want to invest, I could buy a share today, watch it for a couple weeks, see if it dips, buy another share then. Dollar cost average, right? So I'm buying at different points in time. So my average price is a quality entry point. Putting all these points together, to me, Intel is looking like a pretty strong buy. And I am thinking about deploying some capital into it based on this analysis. You make your own decision, do your own research, and let's move on to the next one. Now, this next potential opportunity is one that I think investors would consider much safer. I think it's much safer because it involves God's money, silver and gold. Now, you've probably been hearing about gold. It's all over the headlines. I've been talking about it. It's been making new all-time highs because of market uncertainty. Investors have been looking for safe havens for their money, outside of even treasuries and bonds. And so gold has been absolutely ripping. But what you may not have been hearing as much about is silver. Now, silver is valuable for many of the reasons that gold is also valuable. It's scarce. It has inherent value. It doesn't corrupt. You can use it in medical applications, technological applications. It's in phones, etc. So silver has a lot of use cases, just like gold does. And it's also been considered money, real money, not fiat currency, but real money for thousands of years. So typically, investors will invest in silver, not necessarily for the upside. They're not looking to make money in the same way that they would a stock. They typically put their money in silver as a store of wealth because silver's price, just as gold's, will increase over time to offset how the dollar is being devalued because so many dollars are being printed. So gold and silver over time maintain your purchasing power. One of the ways that this is communicated is the amount of silver that it took to buy a suit or a car in 1950 is usually roughly the same amount of silver to buy a suit or a car 30, 40, 50 years later. And that's kind of one of the benchmarks folks use to demonstrate that precious metals maintain their purchasing power even in an inflationary environment. But right now, I'm looking to make money, not necessarily preserve my value. So why am I even considering silver? The answer to that is the gold to silver ratio, which currently is sitting at about 85-1. So 85 ounces of silver for every 1 ounce of gold. So what does that mean? What it means is that over time, gold and silver miners have observed and analysts have observed that when they're pulling gold and silver out of the ground, the natural ratio of pulling it out of the ground is about 15 ounces of silver for every 1 ounce of gold. And so it's widely accepted that the market price should be close to reflecting the ratio of pulling those metals out of the ground. As of the recording of this video, I'm looking at the live prices of gold and silver. The spot price for gold is $3,725 and the spot price for silver is $44. So if you divide 3,725 by 44, you get 84.65 or about 85. So the ratio on the market in terms of the spot price of silver and gold is 85. That's way askew of what's considered the natural ratio of 15-1. So what does that mean in just kind of layman's terms? It means something is misvalued. It means either gold is way overvalued or silver is way undervalued because that ratio should be much closer together. It shouldn't be 85-1. it should be closer to maybe 15 to 1. Now, doing a bit of research, I saw that really what this shakes out to be over time is maybe somewhere around 20 or 30 to 1. But in either case, the gap should be much closer. So I'm thinking that this gap is going to have to close. And I don't think that the gold price is going to tumble significantly. If anything, it's more likely to continue to go up. And so I think that silver is going to greatly outperform gold over the near to mid-term to kind of catch up and close this gap. So just to share a couple of quick examples, let's just say the gold price remained the same and the silver price went up to, let's say it doubled from its current price at 44. So it went to 88. So 37.25, which is the price of gold, divided by 88, that's giving us a ratio of 42 to 1, which is much closer to that kind of historic average. And if you take, say, a silver price up to $100, keeping the gold price the same, we're looking at a ratio of about 37 or so to 1. So even closer to that average. So the point I'm making is at some point, because stuff like this tends to revert to the mean, it tends to, if something is way out of whack, then in terms of a price, generally the price, if it's too high, then the price will have to come down and get closer to the mean or the average. If a price is way too low, then typically it will have to increase so it comes somewhere closer to the average. And so what I'm thinking is the silver to gold ratio price, because it's way out of whack, something is going to have to either come down or increase so they get closer to the average. Now, maybe both things are true. Maybe gold comes down a bit and silver increases. But the point being, I think gold is going to continue to increase in price because there's a lot of demand. Countries are buying it. Central banks are buying it. Individual investors are buying it. Hedge funds are buying it as an escape from the dollar, which is decreasing in value. So I think the gold price is going to continue to go up. And I also think that because of that, the silver price is going to have to go up by much, much more in order to catch up to gold and bring that ratio back to more of a historical level. So for my $100, a share of silver on the market right now at about 44 bucks looks pretty good. I could buy either a share of silver or I could actually buy a physical silver coin, put it away in a safe and just let it sit for a while its value decreases much more than it would. Remember, not just preserving the purchasing power, but this gold to silver ratio looks more like an investment opportunity because silver has to increase significantly, assuming gold stays the same or keeps increasing in value in order to close that gold to silver ratio. So I'm thinking that silver is a tremendous investment right now. Not to mention the demand for silver from an industrial perspective is definitely going to pick up as we create more electric vehicles, more data centers, et cetera, et cetera. So the same way the demand for gold is going to increase, the demand for silver is increasing exponentially as well. So that's my quick and dirty analysis. If I have $100, I've been stacking up my dry powder. I want to deploy it into something that is reasonable based on the money that I have. If I don't have a ton of money, I think that silver is something to keep an eye on. And Intel is something to keep an eye on. And that's exactly what we're going to do in this channel. We're going to keep an eye on these stocks. And let's just see if maybe a month, 2 months, 6 months from now, this would have been a good idea. Side note, that's what investors do before they even start playing with real money. They do what's called paper trading. Paper trading is pretend trading. If I were to have invested $100 into X on this date, would I have made money 6 months from now? So 6 months from now, maybe we'll check in to see if this is a good investment. I would encourage you to do your own research. And if you think these are good ideas, maybe these are some options for you to deploy some of your capital. Remember, the moral of the money is in order to make money, you kind of have to follow the money. And with this administration, things are kind of crazy because now you're almost following the politics in terms of what to invest in and what opportunities are coming up. This administration has made a ton of money since they've been in office. The president alone has made billions of dollars from his investments. And so, as I've said before, it seems like this administration wants to pump their bags. And if you want to pump yours, maybe you just copy trade what they're doing. Not financial advice, but it seems like Congress, the administration, they have the inside scoop, because if you look at just some of these senators, they have been killing it in the stock market. So follow the money to make money. I hope this helps, and I'll see you in the next video.